Gold futures rebounded as investors look for safety following a slump in global stocks due to concerns around elevated valuations. The December futures rose towards $4,000 an ounce after falling nearly 2% in the previous trading session as the US dollar and Treasury yields strengthened. Treasury yields rallied as global stocks snapped back after extending their steepest drop in nearly a month. Now, gold's decline recently has been influenced by a trio of Federal Reserve policymakers who refrained from supporting additional interest rate cuts in December. This weighs in on the competing risks from inflation and also that softer labor market. Now, this week, investors have the opportunity to hear more viewpoints, including insights from St. Louis Fed President. While digesting the ADP labor data, which came out at 42,000, that was stronger than expected, along with the ISM services continuing to show rising services inflation. So you look at 10-year Treasury yields, they surged, and it was a series of remarks from the Fed officials that offered contrasting views as far as what is next for these U.S. interest rates. After Chairman Jerome Powell, he warned that a December interest rate cut wasn't a foregone conclusion. Now, looking at the CME's FedWatch Tool, markets are now seeing a 64.5% probability that the Federal Reserve will make an interest rate cut of 25 basis points at the December meeting. This is up from 66.6% a week earlier and a 35.5% chance that they leave rates unchanged. This is all according to CME's FedWatch Tool. Now, you look at industrial metals, they are beginning to snap back after seeing some early weakness, specifically in the copper market dipping down to 488 and futures finding a bit of a recovery after that. Silver also looks to snap a 3-day losing streak and punch back over that $48 an ounce, and this comes in after selling off about 11% from its 52-week highs of 53.02 on Thursday, October 16th.